Okay, I'll start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So today we are on 31st of July. That is the last day of the month of July. Between 5 and 5:30, I'll try to review the market and give the live market analysis. Besides, I was supposed to give it on 28th July, the expected market moves. But due to technical problem, we are not able to present that. Anyhow, today's webinar is being recorded. So I will give the forecast for today and tomorrow, that is 1st of August, how exactly the market is expected to behave during these 2 days. Because, tomorrow, the non-farm payroll is expected to be announced. So everybody is anxious to know what could be the possible moves in the market. So let us go to that of the expected market moves. Then I will try to explain to you the other events which have happened in the market. Now, this is the last week of the month, the 28th to 1st of July, 1st of August. So 28th of July is the last week of the month, and it ends with it of the 1st of August. So in a week wherein the month gets over and the new month starts, always we expect the volatile moves in the market. So the market is expected to make some volatile moves with more of a downward bias in the case of Euro and GBP. So that sort of moves we could see, and always, the last week of the month and the first week of the new month, the market is ideal to do swing trades, not the position trades. So keep that in mind. Then we will try to find out what sort of trading opportunities we could get it during this particular 2 days of this week. So these are all the expectations till yesterday, and they just made the small firm up to us close for the non-farm payroll, for the FOMC. So after making a drop, they just formed up nominally after the announcement of the FOMC, but still the moves were only to about 25 pips from that of the low. So that indicate that the players wanted to drop more. So what is expected today? The swing and drop is expected during that of the Japanese session. And then they are expected to make a swing and firm up move during that of the European session. And swing and slide could be seen. And the non-farm payroll is tomorrow during that of the late European session. So for the non-farm payroll, the players are expected to make a firm up move. But before that, they are expected to make the swing and slide. And then for non-farm payroll, they are expected to make the rise. And the people might think that, okay, now the trend reversal has happened. So the Euro and GBP could go up, but they will make only a nominal rise, firm up, not a good rise. And later on, during that of the US session, they will try to make the swing and slide moves. And that will indicate that they wanted to prolong the drop in the case of Euro and GBP for some more time, because we come across the next week, and that will be the first week of the month of August. So first week of the month, the players are known to make the volatile moves. So it is a month beginning time. In order to handle the futures market and the options market, they will make either way quick moves in order to handle the derivatives, so that they will be able to give the higher level call option and the lower level put options to that of the market. And the traders might come in expecting that they could be achieved by end of the month. So always during that of the month end and new month beginning time, they are expected to make some quick move in the market. So people might be thinking that why all of a sudden there is volatility in the market, and all along we have seen only subdued moves, and why all of a sudden the market started making the quick rise and the quick moves. And also in the case of gold and silver, you come across such quick moves. This is because the players wanted to handle the derivative market or the futures and the options market. And there you'll come across the wide range spreads. That is the higher level call and the lower level put options will be there. And also you'll find that the traders would have been struck with it at the higher level long position and lower level short positions, expecting the market to move in their favor to book profit. So normally they create the market sentiment and act against that of the traders during such time. So this is what's happening in the market now. So they're expected to make the swing and slide moves in the case of Euro and GBP today, and nominal firm up and then continue the slide today during the US session, and also tomorrow for 1st of August during that of the Japanese session. And then during that of the European session, they are expected to make a downward move and firm up after that of the non-farm payroll with a little bit of volatile moves. And that might give that impression that the market might go up, similar to that of what they had done it for FOMC yesterday. And later on, you will find the swing and slide moves to continue. And also, the following week, you come across the ECB press conference and also the BOE interest rate decisions will be there. And the market is expected to make the volatile moves, the monthly trend reversal moves during the next week also. So till 8th of August, it is advisable to do swing trades, not position trade. Don't expect any continuous rise or a continuous drop in the market. Now, with regard to the expected range in which the currencies are supposed to move, this week, the high could be 1.3450. They came up to that of 1.3444 and came down to 1.3367 and currently trading around 1.3394. And you know that when they dropped euro below that of 1.3400, initially people thought that it is a great buy opportunity, because from there, last time it went up to that of 1.40, almost to that of 1.40 from 1.34, and then started making the reverse, and it has come back to that of 1.34. It's a matter of only 600 pips move, but it took nearly about 3.5 months. So this is how they just make the moves in the market, and we need to understand the overall market cycle. Then we will know that any level we take position, if we patiently wait in the market, we'll be able to book profit. And so that's sort of overall picture. Once you develop, then the market fear goes off. Because ultimately the players can only create market sentiment and act against it of the traders from time to time. When the traders think that the market is going to be bullish, when GBP is going to 1.7150 and above, people are telling that hardly is a question of going to be hours to breach 1.72 and go above. That is how they created the market feel and started making the slide. Similarly, in the case of Euro, they went up to 1.3965 and then to 1.3999 or 1.40 level, just to give that impression that euro can penetrate all the resistance and go above, and then finally they dropped. So after the drop, people might think that, okay, this is a good level to buy. But you know that we should be able to differentiate such moves with the help of the extended stop limits. So you know that from that 1.35 to 1.34 level, they dropped it nearly about a week. So every day about 25 to 30 pips, they just dropped and they've been holding it. So slow moves are intentional moves. Similarly, from that of 1.71 level, every day 20 to 30 pips, they dropped in the case of GBP. And yesterday also from that of 1.6950, they dropped it below that of 1.69. And to 1.6890 and then bounce back. So you find that they are making only small swings. But in the case of the denominator currencies, if you watch carefully, they are making the one-sided moves. In the case of Canadian dollar, from that of 1.06, they have come up to 1.09. And in the case of Swiss franc, from that of 0.88 to that of 0.9086 or 91 level. And in the case of yen, from that of 101.28 area, they have just come to 102.89, or yesterday they went up to 103. So they are expected to go still above that today and tomorrow. So you find that they are making the narrow range swings most of the time. And only if you know the direction and hold the position as a position trade, then you'll be able to maximize the profit. Otherwise, if you want to do the session-wise trade, you might be able to get maximum 25 pips profit. That is how they are trying to make the moves in the market. And that means slow moves or intentional move. Slowly, they are trying to make that slide, and they are not giving a strong pullback. So when they give a strong pullback, what will happen? When they make a quick rise, what will happen? Those who have taken the long positions will go in for profit booking. So they avoid the longs, any level long, to book profit. So if the trader who has taken a long position, if he sees about 5 to 7 pips or 10 pips of profit, he will not book it. He will think that, okay, going is good, so we'll try to wait and maximize the profit. That's what the normal tendency will be. So they try to present as if, or pretend as if the market could make an upward spike. And without making much of a rise, only they do the rise for about 20-25 pips. And yesterday for the FOMC also, they made only a swing for about 25 pips and then start making the slide again. And so that way they will try to do it today also. And also for that of non-farm payroll, they are expected to make one firm up move similar to that of FOMC and start making the slide again during the US session tomorrow. So in the case of Euro, they come down to 1.3367 yesterday, and they are expected to go further down. And in the case of GBP, they will make one extended downward stop and before making a reverse. So they are only doing a slow slide. So it is an intentional move. Don't be in a hurry to buy it. And let them do an extended downward stop. And during the downward stop, you can buy, or after the downward stop, when they don't breach the new low for more than 2 days, you can enter long so that you'll be able to really see substantial profit. And they are expected to continue the downward move during the first week of August. And then we have to see how exactly they are going to make the moves, because I can give the forecast beforehand, but I wanted to fine tune it with the help of the volume variations in the market. If the volume comes suddenly to that of the market, then they will reverse it fast. Otherwise, they will try to hold near low and make the lower level consolidation with a downward stop and frequently for a prolonged period till end of August. And then later on, they will try to gain the levels. So we need to find out whether they have got the adequate buy position or not by next week. Depending upon the moves, we'll be able to understand. So they have to make quick lower level consolidation with a quick downward stop and moves, and also extended downward stop and move to indicate that they want to reverse. Before that of the downward extended stop, and don't expect a big rise in the market. Then in the case of yen, 101.75 was the low, and then they went up to 103.09, and they are holding around that of 102.77 now, and they are expected to gain further upward. And in the case of Swiss franc, they came down to 90.36 and come up to 91 level, and they are holding around 90, 85, 84 level, and they are expected to go further more on the upside. Then in the case of Canadian dollar, from that of 1.08, they came up to 1.09, and they are holding above 1.09 now. And slowly they are expected to go up, and you will find more of a one-sided move in the case of Canadian dollar. And don't expect to trade in the case of Canadian dollar either ways moves, because many of the traders, they apply the same rule what they are applying to Euro and GBP. Euro and GBP, they will make either way moves. But in the case of the denominator currencies, they will make one-sided moves. So you have to differentiate it. But when you apply the same statistical logistics to that of the charts, you will find, okay, after that is why many of the people were telling, and in fxtrade.net, I noticed that 1.0830 is a strong resistance, because they have been holding it as a support before falling further down. And so they thought that will be the support turns to resistance. And so everybody expected it will not be able to breach 1.0830, and then it might dropped down, but the players made one continuous rise to 1.09 and just taken off all the stops. So that is how they do it as a one-sided move. So during that of one-sided moves, you'll find that they will make more rise, less drop, more rise, less drop, so that it will just pierce any of the resistance, so-called resistance. Then Australian dollar, they came down to that of 93.04 and further downward move could be seen today and tomorrow. And the high was 94.16. And they have been doing the range bound moves. And many of the people were of the opinion that 93.30 is a strong support. And then it will bounce back to 94, 94.50 and then come down. So one can do about 100 and 150 pips, either way swing trades. But now they have breached it and holding it, and that will give the confusion whether it will bounce upward or downward. But the players are expected to go down in the case of Euro GBP and also Australian dollar in this week and next week. Let us do the market reading. So normally what do? We note down the initial lows and the highs around 3:30 GMT on a daily basis. This is how it will be. So on 4 days, I just noted down. And if you see carefully the lows, how they have been handling it. So they have been holding around the same level with a nominal variations and finally come below that of yesterday's low. And today's high is lower than that of yesterday's low. So normally Monday and Tuesday, they try to make sideways move and then start the intentional move from that of Wednesday. And today is Thursday. They are just still holding below that of yesterday's initial low in the case of Euro. And that indicates that they wanted to go down further. And similarly, in the case of GBP, slowly the lows have been set at the lower level and the highs have been set at the lower level. This is what people call it as the lower lows and the lower highs. And then they are expected to breach this low, 6905, because today's high is lower than that of yesterday's low. Then in the case of yen, they've been giving a support around 101.75 and then slowly you find that they've gone up to 102.75 or 74 and they are not dropping it below. Straight gained 100 pips and then started making a consolidation here before making further rise. So again, in the case of denominator currencies, you'll come across one-sided moves. Don't think of doing either way trades. And in the case of CHF, again, slowly they have done the consolidation for 2 days and afterwards slowly gained the levels. So what they set it during that of the initial low and the high formation will give the clear indication for us what they intend to do. We need not worry whether there is going to be a non-farm payroll, whether there is going to be a FOMC or ECB press conference or the BOE interest rate decision or GDP and things like that. Ultimately, we need to understand that the players make the move depending upon the shorts and the longs built up from time to time. And they may pretend as if they are reacting to that of the data release, like how they have done it for FOMC. But ultimately, they will try to make the moves of their own, not in tandem with that of the fundamentals. Then tomorrow, after the non-farm payroll, we will come to know how exactly the fundamentals have got the limitations. Then later on, you can realize. Now, in the case of Canadian dollar, they are just given the yesterday's levels, 1.08, but actually today's low was 1.0900 and the high was 1.0907 and 1.0917 here shown is yesterday's high. So in the CAD, it is not updated, but anyhow, you find that it is holding above that of 1.09 level and slowly it is expected to go up. And Australian dollar, 93.07. Slowly you see that in the case of Canadian dollar, they gained the levels from that of the initial lows on a daily basis. Similarly, in the case of Australian dollar, from that of the initial low, they just dropped it. And today's low is much lower than that of yesterday. Yesterday's initial low. So which clearly indicate that they will continue to make a downward move in the market. That means what? The players have built up the sell positions at the higher levels all along. I've been telling that all those higher levels were sell levels, but many were of the opinion that we can do the buy and sell trades. And I was the only person who was telling that the market is expected to undergo such corrections. But many were thinking that it is going to be the other way move. And later on, the players have just taken the time to consolidate and build sell positions. And now they are doing on a daily basis the intentional move on the downside. So every day you come across the net change of 20, 30 pips on the downside, but not much of a pullback. So at every level, they are building sell positions. So when they will buy, they have to make one quick downward move and consolidate. Then afterwards, extended downward move, downward stop and reverse in a matter of about 2-3 hours. And then they will start making the rise. So don't expect the reversal to happen immediately. So here you find that currently Euro has not breached the initial low or the high. GBP has not breached the initial low, but breached the initial high by 2 pips. And Yen, they are not breached the low or the high. CHF, they are not breached the low or the high. Canadian dollar also not breached. And Australian dollar also, they are not breached the low or the high. So excepting GBP, the other currencies, they are just making the consolidation. And also you do not come across about 40 pip spread between the low and the high in any of those currencies. And this is yesterday's level. That is why you find more. But actually today's level is hardly about 7-8 pip spread between the high and the low. So you find that the spread is narrow. They are simply holding it and they are expected to make sudden slide or a drop during the late Japanese session. And afterwards, lower level swing and then firm up during European session. And people might just give different opinions with regard to non-farm payroll because that is the only thing now envisaged. So all along, yesterday and day before yesterday, people were talking about FOMC. Then that event is over. Then till tomorrow, non-farm payroll release, everybody will be talking about non-farm payroll, how it is going to impact. Some will say that market will go up. Some will say that the market will come down. Some will say risk appetite could emerge. And some will say that risk aversion is happening or safe haven strategy might happen. So many stories you will continue to listen. And many of the traders have the opinion that the crosses are not affected by US dollar, but it is wrong because I've seen that many of the traders, they look into that of the crosses during that of the subdued moves in the market. And when the majors make the subdued moves, then immediately they think that the crosses are making very good moves. So why not we enter into that? And they are not influenced by US dollar. But that is a wrong approach because US dollar is either in the denominator or in the numerator as far as the majors are concerned. The players make the moves in the case of majors in order to bring in the moves in the crosses. So like yesterday, they just quickly gained the levels in the case of USD yen from that of 102 to 103. And because of that, yen crosses went up. So you need to understand that they make moves in the case of the majors in order to bring in the moves in the case of crosses. It is not the influence of the moves in the crosses on that of the majors. And see, that is the way it is being presented wrongly to that of the traders. So everything is being wrongly presented to that of the traders to give the confusions to the traders. But actually, the players make the moves in the case of the majors. Because of that, the crosses undergo such moves. Keep that in mind. Because you know that they create the sentiment in the market and act against the traders. Similarly, they ask everybody to follow their local times like New York time. You follow the market using the New York time. or follow the market using the European time. So that is how they influence the people to use the local time to look into the other market, so that they don't understand how in 24 hours the market is being manipulated. So invariably you find that the misguidance is more, which is given free of cost. Obviously, anybody has to give it free of cost, only then people will listen to that. And then later on, you find that we pay it indirectly in the form of doing wrong trades. So in our market reading and trading, when the market is near the high, or any currency is near the high, not breach the high for more than 30 minutes from start of the session, we'll try to take a sell position. And when the currency moves to the opposite side during the late session, we try to book profit after keeping 30 pips hedge order to start with, and then keep stop at entry in order to eliminate the risk. And later on, keep about 45 to 75 pips, take profit limit, and thereby, and also use the trailing stop so that the market might hit our trailing stop or the limit order so that our profit is assured. So always keep in mind that you might be tempted to trade more positions, and you might be tempted to trade with more leverage, but they're all detrimental. So understand that you want to really earn money from that other market, use the patience, and no technical analysis required, and be patient. Take only one position at a time and try to calmly wait. And when the profit is seen, keep stop at entry and try to use the trading strategy of trailing stop and the limit. You'll be able to continuously earn from the market. By following all other methods which are being freely given to the traders think that, okay, if I use the stop, then the stop has to be calculated as 1:3 or 1:4 reward. That is 1 part risk and 4 part reward. That is how I have to do the analysis. Then they keep about 70 pips stop and 210 pips the limit on the high and take profit order. But the market hits the stop first. Then later on, you realize that, okay, when I keep the stop, the market hits the stop and then later on moves as per the expectations. So let me follow the chart without a stop. Then you find the market simply breaches all the supports and continue to drop. Then the trader finds that there is a erosion of the margin and the margin call threat, and immediately goes for a distress trading. So nobody talks about the distress trading, why the trader should go in for a distress trading. And simply they say that discipline yourself, discipline your trading using the stop. But the person who has done the trading knows very well by keeping the stop, they hit the stop and is become an open challenge for that of the traders. So why not we use the hedging order to limit the risk, so that if it is hedged, we can look into the hedge and see whether the hedging is making profit or not. If not, for 30 minutes, close the hedge and keep under the hedge order, so that you find that you continue to hold the position to book profit. These are all the market timings, because the market is of 24 hours nature. It is not related to that of the local times. The market makes moves for 24 hours, and you find on a daily basis the market follow these market timings. And if you find that the early and the late sessions, they make the moves in the case of majors, and mid-session they make the swings in the majors between the high and the low, so that the crosses make peak moves on the upside and the downside during the mid-sessions. If you follow the timings, you will find that early and late sessions, they handle the majors, and mid-sessions, they handle the crosses in order to attract more volume from the traders. And finally, they trap the traders to do short covering on the upside or long liquidation on the downside. And that is why, including the experts, say that nearly 85 to 90% of the traders, or sometimes 95% of the traders, lose money in the market, and also give the disclaimer that trading currency is very risky. Because after telling all the stories, that disclaimer is given, and probably the regulatory authorities insist upon it because nobody teaches the hidden secret of the market. That is why, okay, you need not teach and you need not tell them, or you can simply tell anybody to jump into the water, let them need not know swimming, but they should understand that they could drown. But you need not teach swimming. That is what the regulatory authorities say. So that every analyst is say that you just jump into the water and struggle. If you are capable of coming out, you can come out. Okay, so these are all the timings given by that of the players. And so we need to understand the players make the moves depending upon the banks closing and the opening times in different time zones. And if you follow this, you'll be able to really find there is a sense in understanding the market. And that is why I use the live market code page to observe the market moves. Nothing more than that. And if you try to use other tools, you will be more misguided. I'm telling this being a statistics professor, because if the market is not manipulated, then all the charts, all the analysis will work 100%. If the market is manipulated and it is a man-made market, then how we can say that market will obey the technicals and fundamentals? Because the players pretend as if the market is going to follow technicals or fundamentals. And in the name of the opposite, they try to trigger the market in a different way or in an unexpected way. Ultimately, what the traders get at the end is a market fear. Nothing more than the market fear. So when they look into the currency, okay, fine. When they try to take position, they develop the market fear, the uncertainty. So they try to substantiate their entry by looking into the technical analysis, fundamental analysis, all those things, and finally take a position. And when the market moves against them, they develop the fear. And once the fear goes up, then they go in for distress trading. So instead, my humble suggestion will be give less importance to that of the technical analysis or fundamental analysis or any sort of analysis. We just watch the market. If it is near that of the high, not breach the high for more than 30 minutes from the start of the session, take a sell position. And that makes sense. And then try to book profit near that of the low. And when they don't breach the high, understand that they do not want to rise and give profit booking opportunity to the other buyers. And they wanted to trap the buyers. So how they can trap the buyers? By not raising it so that they're not in a position to book profit. And later on, they continue to slide. Then they go in for a distress trading because predominant of the traders, including many of the institutions, they don't use stop. And ultimately, when it goes beyond their control, they go in for a distressed liquidation of the positions. That's what happens. And the players are capable of triggering the market in such a way and try to see that the traders and the institutions lose and they make huge money. So they know very well money multiplies by using cunning strategies. So I'll come back on 4th of August and try to give next Monday the expected market moves for the next week. And also afterwards, Monday and Thursday, I'll try to give the webinars. So let me try to answer to the questions which are asked here. Okay, MRC has got a question. How do we know the positions built up? See, we need not physically see whether they have built up the positions or not. It depends upon the moves, what they are trying to do. Suppose somebody is taking the dinner or somebody is taking the breakfast, for example. Okay, you sit in front of him, but you came late. Okay, You came late and the person spends more time in talking to you than taking the food. And you understand that he has already taken sufficient food. That is why he is slow eater now. And otherwise, no, when you are talking, you will simply say, excuse me, let me finish my breakfast and come, I am very hungry. You will just express to you. So by looking to the expressions, so whatever the hidden agenda of the player might be, they have to show it in the market. And when they are not gaining the levels, that means they are trapping the short sellers. And also the slow moves on the downside every day 30 pips indicate still they are sellers. Because they sporadically sell in the market and they want the traders to buy and they don't make a pullback for the traders to book profit. When even though many are expecting the spikes on the upside, but the spikes are not happening on the upside. Only in the case of denominator currencies, they are making the spikes. So that shows, even though nobody anticipates that the US dollar has to become strong, that it is happening. And there is no fundamental reason for anybody to anticipate the US dollar has to become strong. But the players want it that way. Why? Because they have built up huge sell positions at a higher level in the case of Euro and GBP. So they want to drop and book profit. So they are not interested in the currencies, but they are interested in the profit. Eric, will other Aussie pairs as base currencies tend to follow? Yeah, Aussie is also expected to come down drastically. Yeah, Australian dollar as well as New Zealand dollar are expected to come down. Then Ini has got a question. Until how many weeks will the trend to continue? That's what I said. Normally they're expected to finish it by first week of the new month. But this time, because of the slow volume, still they are not done the lower level consolidation with the extended downward stop and move. So the reversal will take some time. I will tell you on a weekly basis whether the reversal has happened, or otherwise I'll just post it in fxtrade.net whenever the extended downward move is seen and inform you beforehand that the market is going to reverse so that you can start making buy and sell trade. I'll show the second slide. Vengatramana. Please, there are any strategy to trade in the derivative in the commodity market? They are totally different, and commodity markets is exclusive market because it is not, even though it is available 24 hours online, but still you find there is a separate commodity market which is active during that of the Hong Kong working time, London working time, New York working time. So you find there the players use a different strategy. We have to understand what the players see. It is something like knowing the strength and weakness of the opponent before entering into a fight. There are two ways of conquering it or achieving your objective. One is understanding the weakness of the person and try to hit him. But our idea is not to hit the players. Our idea is to exploit the limitations of the players and try to earn along with them. Then MRC. Which time you recommend to watch daily candle? GMT. GMT time is ideal. Not +2, +3, New York close, all those things. They are all simply misguided. They will simply say that, okay, the candle closes below this level, above this level, then something is going to happen. You will find that the market does not respect it that way. I can always come with alternative excuses. No, when I say that, okay, this is a head and shoulder formation. Okay. It's not happening, then I'll simply say because of the divergence that has happened. So I can use some excuses. That is not the way to take decisions in trading. I can only use it as excuses in order to prevent anybody attacking me or prevent anybody say that you are telling nonsense. And so there is no need for anybody to defend themselves, because everybody is trying to give the forecast, what is going to happen. And when I say there is a forecast, then there is an element of risk. That is, the forecast can go right or it can go wrong. And when somebody is listening to my forecast, also knows very well, okay, it is only a forecast, which can happen, or the market can move exactly opposite to that also. So in such a situation, when the market moves, many of the people think that, okay, the analyst should say, sorry, my forecast has gone wrong. But my simple question is, if the forecast or the analyst say that, sorry, the forecast has gone wrong, have you got back your money? We know very well the forecast has gone wrong. But ultimately, what has to be done? The analyst has to work hard and try to see that such occurrence does not happen again and again. And it is not frequently happening. So there comes the skill set. And there comes the understanding of the traders. And also, I do not want the traders to blindly follow anybody, including me. And they need to understand, they need to find out what is suitable for them and whether there is a meaning in following my method or any method objectively, and see whether it is applicable to the various currencies, and then you try to follow it. Simply, okay, X is said, so I'll follow. Okay, it is not working, I'll discard X and then go to Y, then I'll go to Z and things like that. You will be going helter-skelter, but ultimately you are not going to get the real benefit, and you are not going to understand, if at all you are hungry in this world, other than you, nobody can feed. If you are hungry, only you can eat. Others cannot eat, and you cannot become satiated because of that. So if you want to become a successful trader, you need to learn the analysis to a certain extent, and learn the right type of analysis, a simple analysis, what the players are trying to do, because it is a man-made market. And then try to see that the trading strategy is going to help rather than anything else, because none of the occasions we may come across a situation wherein the forecast is 100% successful all the time. Even though I say that the market is going to fall, and I'm not giving you minute-to-minute forecast. Okay, that there could be a 5 pips rise, 2 pips drop, and 7 pips rise, and things like that. But I'm capable of giving it, but I'm not giving it for the simple reason, because I do not want you to take that as a spoon feeding and blindly follow and do that. And in the event, if the market goes against, you become unprepared. That should not happen. Okay. In Monal, I'm trying to better understand how to trade the crosses. What is a proper approach to trade them? Let's say GBP, depending on the currency of the cross pair, the moves are not the same in the same kind of strength analysis. I should do or look at the live market quote page. See, if you want to trade any of the GBP cross, for example, you need to find out the net change in the case of GBP, and you want to say, for example, GBP yen cross. Then GBP see the net change 13 pips and yen net change 6 pips. So that means GBP yen cross, it is showing 5 pips positive net change. No? And here, what sort of analysis you have to do? Now, GBP is showing 13 pips positive net change. Yen is showing 6 pips negative net change. So that means yen is a denominator in this cross, in this particular USD yen. GBP USD, GBP is a numerator. And in GBP yen, GBP is the numerator. USD yen is the denominator in GBP yen. So that is how they are related. Ratio, all the three ratios are related. So in that, when USD yen becomes stronger, that means the denominator becomes stronger, in a ratio, what happens? The ratio value comes down. And similarly, if the denominator value increases, like it goes to 103, 104, and it is in positive net change, then what happens? It is also in positive net change. When both are in positive net change, we'll come across a cumulative effect on that of the cross. So 13 plus 6 will be 19 pips if both are positive, GBBN. Whereas now you find that GBB is showing 13 pips positive net change, N is showing 6 pips negative net change, but not 1 pip is equal to 1 yen or $1. There is a variation with the pip value is different. So approximately you come across the difference between these two as about 4 pips or 5 pips as a variation. And how to enter into those trade? It is simple. Suppose I want to know whether I can take sell and buy or a buy and sell trade in the case of JBB yen. So understand whenever they are making contrary move, that is rise in the case of USD and rise in the case of GBP, that means they wanted to rise. And if they show initially about 7, 8 pips in both, that means they will gain up to 40, 50 pips in both. Then in such a situation, and you'll find that the ratio GBBN will be closer to low. Then they will not breach the low in the case of USDN, GBB USD, and GBB yen for 30 minutes of our observation during the mid session. Then you try to take a long position and keep about 10-15 pips stop. They will not hit your stop. You will be able to see continuous rise. And once they stop gaining the levels in the case of USDN and also GBB for 30 minutes, you find the gains in the case of GBBN is also stopped. And they form the high, but they simply make the moves closer to that of the high, but they don't breach the high and book profit. That is how you have to do the trading in the case of crosses. I explained in detail in my trading system webinar, which are being listed in effecttrade.net under my profile. Okay. I will show the slide again. I'm sorry that I'm taking longer time because so many questions are asked. Okay, so this is the slide pertaining to that of the expected market moves. That is, today is 31st. They're expected to make the slide. In the case of Euro and GBP, these are all pertaining to that of the numerator currencies against that US dollar. In the levels, they're expected to make for the downward moves. And the initial lows and the highs. Okay then. So thank you one and all. I'll come back on 4th of August and try to give the forecast for next week. And also we will try to see how exactly we can trade during that of monthly trend reversal time. Wish you all the best in your trades. See you on Monday. Thank you, FX Trade, for the facilities and the extension of the time.